Hello, I'm Stuart Welch and I'm delighted to be back here at Catch Fire University. Today my topic is going to be entity selection. So you've decided to start your own business. How should you operate that business? Should you be a sole proprietorship? Should you be a C corporation? Should you be a limited liability corporation? There are many choices and each one of those has both pros and cons. And today, for a few minutes, I'm going to talk about the pros and cons of each of those choices. And then I'm going to back it up with a white paper that's going to be free to you through Catch Fire University. Before we get started, let me just give you a moment of background about myself. I'm an entrepreneur. I own two businesses that are what I call fee-only financial advisory firms. And we manage money for people all over the country, and we also provide financial advice. Now, the fee-only aspect of that means that we don't sell products. So we're sort of like an accounting firm, but instead of focusing on tax advice, we focus on financial advice. I'm also an author. I've either authored or co-authored 4 books. 2 of the books are in the area of estate planning and wills. 2 other books are on general personal finance. I'm also a professional speaker and I invest in various things including businesses and real estate. Now, I've studied self-made millionaires for over 30 years, and one of the keys to becoming a self-made millionaire is to actually own your own business. And I know that Doug is a huge proponent of owning your own business. Once you've made that decision, what is going to be the best way to operate that business? That's what we're going to focus on today. So if you're ready, let's get started. My goal for this presentation today is to give you an overview of all of the various entities, all of the various ways that you can run a business, and give you the pros and the cons of each. And I'm going to do this in less than 12 minutes. And then I'm going to refer you to the white paper that I discussed earlier, and there we'll get all the details. So let's start with the simplest form of operating a business, and that's called a sole proprietorship. Now, this is the most common way that people actually start a business, particularly when they're just starting a business. And with a sole proprietorship, you basically don't do anything. You just decide that you're going to start a business, and you go out, if it's required, you go out and get a business license. And you're doing it generally in your name, or in some cases, they'll do it in what's called DBA, doing business as and whatever that particular name is. Some of the advantages of that are that it is very simple. You just get started. And one of the major disadvantages of that, and the number one reason that we recommend not using a sole proprietorship form, is that you create unlimited liability. So if in the operation of your business you create a liability and you get a lawsuit against you, you've actually exposed all of your personal wealth as well as any business wealth that you have to those particular creditors. So who's a good candidate for sole proprietorship? Generally, not that many people. I can think of a couple of cases where you don't have any personal assets to speak of, or your business is one in which you think there's virtually no liability associated with it, and or you have virtually no funds in which to start a business. So you want to start with the absolute minimum cost. But truly, as soon as you begin to accumulate any kind of wealth, you're going to want to bump yourself up into one of the entities that provides a lot more protection from a liability perspective. As we move up in complexity, we would move to a partnership. So let's assume that you and someone else, or maybe several people, decide that you're going to start a business together. There, what you're going to do is form a partnership. A partnership, like a sole proprietorship, is pretty simple and straightforward. It doesn't require a formal legal entity in order to do that. And there are some advantages to it. Number one is it is simple, it is easy to do, and there's some major disadvantages. And the primary major disadvantage also has to do with liability. So it's like with a sole proprietorship, you've created unlimited liability on yourself. With a partnership, you've actually taken that liability and made it even more acute. And the reason is that you're not only liable for your actions, but you're now also liable for the action of your partners. A partnership does require a separate tax return, whereas with a sole proprietorship, you're actually filing on your personal tax return, but you're doing it under what's called a Schedule C. Now, a variation of the partnership form of business is what's called a limited partnership. And then with a limited partnership, you'll have one or more general partners and then one or more what's called limited partners. Now, the limited partners, the advantage of being a limited partner is that you actually limit your liability typically to the amount of money that you invested in that partnership. One of the disadvantages of being a limited partner is that you have no voice. You can have no control over any of those partnership decisions. The general partner in a limited partnership actually has unlimited liability, just as he would in any partnership. And so that's a big disadvantage for you if you're acting as a general partner. And in fact, what we see in most of those cases is the general partner is some form of entity, either a limited liability corporation or they're going to be a C Corp or an S Corp. Now let's move up into a much higher level of complexity, and let's talk about a C corporation. Now it's called a C corporation because it's subsection C of the Internal Revenue Code. A C corporation is where, when you think of big public companies, many of them are C corporations. So a lot of times people associate a C corporation with a really big business. That's really a misnomer because there are lots and lots of small businesses that also operate as a C corporation. Now, with a C corporation, it's a much higher level of complexity. The first thing is that a C corporation is considered a separate entity. It is separate from you. It is like a separate person. And so, everything varies by state, but basically you're going to have to file papers of incorporation with your Secretary of State for your particular state, and you're going to go through a formal process of establishing this. And a C corporation is going to have its own tax ID number. It's going to have a separate tax return, and the formation costs of a C corporation are going to be significantly higher than they would with a sole proprietorship or a partnership. When we talk about the advantages of a C corporation, probably the primary advantage, or the number one advantage, is liability protection. It is one of the best entities to protect you from a liability perspective. Let's focus a moment on some of the disadvantages of a C corporation. In addition to being relatively expensive to set up, it's not a pass-through entity, which means if you have losses in your C corporation, they stay at the C corporation level. They don't come through where you can deduct them on your personal tax return. With a C corporation, you also face what is potentially double taxation. Here's how that works. You have income that comes into your corporation, and that corporation must be taxed at the corporate tax level. And then if you take money out of the corporation above what is considered to be a reasonable salary, then that comes out in the form of a dividend and it gets taxed again. And finally, it's really important if you own a C corporation that you run it as a separate entity. You don't want to use it as your personal checking account. And the reason is if you were to get sued and get a judgment, the attorneys would attempt to pierce that corporate veil and come through and get to your personal assets. To solve the problem of the C corporation not being a flow-through entity, what a lot of people will do is make what is called an S corporation election. With an S corporation, you have the same protections from a liability perspective as a C corporation. The difference is that an S corporation is a pass-through entity. So if you have losses, those losses can come through and be deducted on your personal tax return. Because of this, a lot of times when people start a business, they'll start out as an S corporation, and they anticipate that they might have losses in their early years, and they want to make sure that they can take those losses off of their income taxes. And then as their business begins to grow and their corporation becomes more successful, a lot of times they will convert to a C corporation to pick up some additional advantages, which are discussed in my white paper. Let's go to the last entity, and it's called an LLC, Limited Liability Corporation. Now, LLC is relatively new. It started in the 1990s, and I would suggest it is perhaps the best of all worlds. The reason is that an LLC is treated as a corporation for liability purposes. So you have this excellent protection around you in case there was a lawsuit. Your personal wealth is not at risk if you run it right. The second thing is it's treated like a partnership or a sole proprietorship in that it's a pass-through entity, meaning that if you have losses, they pass through so that you can take a personal deduction for them, and as well the income is a pass-through as well. Now, the disadvantages of an LLC are that it's a pretty complex in terms of operation. So it is like a corporation in that you have to literally dot the I's and you have to cross the T's and make sure that you operate it as a separate business. If you don't do that and you were to get sued and get a judgment against you, the attorneys would attempt to pierce the veil of that corporation and come after personal assets. So it's very important to treat it as a separate business. You don't want to be paying personal expenses out of it and just treating it as your personal checking account. Well, that's an overview of the entities. I hope that that was helpful to you. What I want to make sure that you have an opportunity to review is a white paper where we're going to go into each of the entities in more detail, and we'll talk even in more detail about the pros and the cons. If you want to access that, you can do it free for Catch Fire University students, and you need to go to my website. It's getrichonpurpose.com, and there's a tab that's a store tab. If you'll just click on that store tab, you'll see where you can order that white paper. Now, it requires a special code in order for it to be free, and Doug will provide you with that special code. And speaking about getrichonpurpose.com, I know a lot of times people, when they think of get rich, they're thinking about money. But in the truest sense of the word, get rich is about having a rich life, all aspects of your life. And that's what my company is devoted to. Until next time, I'm Stuart Welch, and I wish you good fortune and God's blessings.